A couple of weeks ago, someone from Montreal asked us to comment on what's going on in the real estate market out in that city. And we're going to do that today, but we're going to do a bit more. We decided to expand that work to include Canada's 15 largest cities. So if you live in one of our largest cities, this might be interesting to you. Stay tuned. What we're going to do today is go city by city through 15 largest cities in Canada. And we're going to compare the average house price in that city. We're going to compare rental yields on the low end and on the high end to what you can get if you buy a GIC from our good friends at Tangerine. We're going to compare it to a 5-year GIC from Tangerine, and we're going to compare it to the dividend yield on a Royal Bank stock as of September 16th, 2014. I know to you real estate investors out there, stock equals scary, but this is the Royal Bank. It may not be out of business in the next 10 years. Also, if it's that scary to you, you can buy a put on it. And if you want to get out, you can get out inside of 90 seconds. So I think a comparison with Royal Bank's dividend yield is actually an apt one, and so we're going to include that as well as the GIC from Tangerine. Before getting started though, I want to talk a little bit about something called the risk premium, and basically the idea is a very simple one. If you can get 2.55% is what you can get on a GIC from Tangerine right now, and any other investment is going to make you less money than that and impose risk upon you, it doesn't make sense for you to buy it, okay, that other investment. So if you can get, say, 5% on a GIC, why would you ever take on risk and only get a 3% return? It doesn't make any sense at all. That's the idea of the risk premium in a nutshell. That's something I want you to keep in mind as we're going through city by city and doing an analysis of each real estate market in this country. So this request came from Montreal initially, so let's start with Montreal. The average house price in Montreal right now is $328,745 as of August 2014. Average minimal rent for a one-bedroom apartment in Montreal is $923, and the average rent for a two-bedroom or three-bedroom apartment in Montreal is $1,190. So the yield on rent in Montreal ranges between 3.37% and 4.34%. Now, let's compare those rental yields to the GIC rate that I mentioned before, the Royal Bank stock. So the GIC, as I said before, was 2.55% from Tangerine. That's a 5-year GIC. Royal Bank yield is 3.6%. Okay, so that means that a person who goes through all the work of renting out an apartment in Montreal on the low end is beating a GIC by 0.82%, or what's called 82 basis points. Okay, so if you're doing all that work and taking on all that risk on the low end of the rental market in Montreal for a little less than 1%. The person who's going through all the work associated with renting out their apartment or house or condo or whatever is making a little over 0.82% or 82 basis points over what they can get from a GIC. So you're taking on all that work and doing all that, taking on all that risk and doing all that work in order to get an extra less than 1% in terms of your return. You're obviously getting less return doing the rental yield in Montreal on the low end compared to the dividend yield on the Royal Bank. Sat back, did no work, bought some shares of Royal Bank, and 4 times a year the dividend check came into you. Now let's look at the high-end yield in Montreal. Those would be the properties that are less highly priced or have higher rents associated with them or some combination thereof. Okay, their yield on the high end right now is at 4.34%, obviously better than the low rental yield. And at 4.34%, you're making 1.74% more than you would on a GIC, and you're even actually making a little bit more than you would on a Royal Bank stock. Now, whether 0.75% is adequate compensation for taking on all the risk of finding tenants, delinquent tenants, plumbing problems, being assessed for street repairs, whatever, I would say it's not. So I would think on average, the life of a landlord in Montreal right now is a pretty tenuous one. That's it for Montreal. As a landlord in Montreal, you're not making a lot of money on a risk-adjusted basis relative to what you could make on a GIC or shares of Royal Bank. There it is.